Good evening, welcome to Reality Check, where tonight we're doing a reality check on the state of the economy. Perhaps the most important issue at the end of the day for all of our collective well-being. And today and yesterday, data coming out to show that there is good news and there is bad news. So, which do you want first? Okay, let's start with the good. The Sensex, stock markets. Sensex zooming to an all-time high, closing above the 32,000 mark, first time ever. Obviously, the stock market's really enthusiastic, really euphoric. Perhaps they can see something that many of the economists cannot quite see. So that's one piece of really good news. Also, data just out yesterday showing that price rise is at one of its lowest levels that we have seen in a long, long time. And remember, price rise and inflation is a huge issue for the middle class and for the poor. It's politically really, really important. Inflation, as I was saying, at a record low. June consumer inflation numbers 1.54%. So that's really good data that's just coming out. So that's some of the good news right now. Not such good news is that economic activity seems to be slowing down. Look at the latest data. May industrial numbers, which are again just out right now, same time as the inflation numbers came out, 1.7% industrial growth, down rather sharply. Manufacturing growth 1.2%. Consumer durables growth minus 4.5%, mining sector growth minus 0.9%. So those are not really good numbers. And some really bad news, of course, is the question of jobs. Data released today by the Center for Monitoring the Indian Economy says that 1.5 million jobs were lost after Notbandi. That's from January to April 2017. 1.5 million job losses. And CMI also says that job losses are concentrated in the younger age brackets. Those concerns and job loss, by the way, have been around for a couple of weeks, and in fact it prompted this comment from the BJP President Amit Shah, who essentially said that it's not that Narendra Modi has not been faced by these issues before, and he used in Gujarat the model of skill development and self-employment to really crack it, indicating that this is something that will be used in the rest of the economy as well. Now, a clear policy prescription also seems to be coming out from the government for what needs to be done now. They seem to be very clear. The RBI should cut interest rates. Now, there is a certain economic logic to that. Remember, if you cut interest rates, then growth and investment could pick up. There could also be an impact on NPA. So that's a good part. Cut interest rates, people will go out and invest a lot more. Good news for all of us, of course, is loans come down, housing loans, car loans, all of that comes down. From an economy point of view, growth picks up, investment picks up. That's the good part of it. Risk is that inflation could also pick up. But given that inflation is as low as it is, that might be a risk well worth taking. This, at any rate, is a thesis that's been put forward by the Chief Economic Advisor, Arvind Subramanian.
Paradigm shift in the inflationary process to low levels of inflation. And I think it's a shift that's been missed by all, reflected in the large, systematic and one-sided inflation forecast errors, as well as the latest data on the IIP, is something that I am sure all policymakers will reflect upon very, very carefully.
And joining us for a lot more on this is Soumya Kanti Ghosh, who's the Chief Economic Advisor to the State Bank of India. State Bank of India, of course, one of the largest banks in the country, the largest bank, in fact. And what they feel on the state of the economy is, of course, of crucial importance. Mr. Ghosh, thanks so much for being with us. I think if you take a look at the situation where growth is slowing down, but inflation is also very low, the clear indication that seems to be coming from the government is that the ball is in the RBI's court and that interest rates need to be cut. Would you agree with that basic assessment?
No, I think so. I think as of now, if you look into the inflation numbers and if you look into the inflation assessment of the central bank, in April when it had given out the forecast, it was in the range of 4 to 4.5% for the months of April to September of this fiscal year. It was cut to 2 to 3.5% in June. And yesterday the data which was released showed that the CPI has actually dropped to below 2%, and in all probability it will be below 2% for the next month also. So my sense is that the inflation numbers, even for the whole year, if you look into the numbers, if our internal estimates suggest that the average inflation could be lower than 3.5%, throughout the year, which is lower than the RBI terminal forecast of 4% inflation targeting. So I think all the numbers add up for possibly some sort of an rate adjustment by the RBI in the forthcoming policy.
You know, so we'll wait and see if the interest rate is cutting, but I just want to understand from you the numbers that we are seeing from CMI today. 1.5 million jobs lost in the, in the first 3 months of this year, those very low IIP numbers. Is the economy in some sort of trouble? I mean, are we seeing a real slowdown on the grounds, which are now starting to be reflected in numbers, which is a cause then for some concern?
See, I tend to agree. See, there are both parts of this story. The first part is obviously on the job front. I think there has been a lot of news on the jobs. Yes, there possibly, if you look into the survey reports by the NSSO, there has been reports that the creation of jobs has slowed down. But in the same vein, I would like to point out that the numbers of job creation which the NSSO gives out is from a limited sample, and you need to look into a holistic picture of the jobs which are created in the unorganized sector. For example, through the Mudra jobs. If you know that the Mudra has actually extended loans to around 8 crore units in the last 2 years since its inception. So I think we need to look into the larger picture, because in the Indian context there are now reports that possibly the entrepreneurship is being given a fillip, because India is a country where more than half of the people are employed are self-employed. So from that point of view, while I agree with the assessment that there could be some amount of job creation which has slowed down, I would also tend to highlight the factor that there has been job creation in sectors which are getting unnoticed. And regarding your assessment about the economy, I agree that the economy in the last quarter of FY17, the growth numbers had slowed down. The real GDP, the GDP numbers were 6.1%, and the GVA number, which is a better approximation, was at 5.6%. So there has been a slowdown in the GDP growth rate, and as of now, the things on the ground looks that it is making a gradual pickup, not a drastic pickup, and hopefully the second half of months, as we move towards the resolution of the stressed assets, things will become much better than what they are today.
Right. So if you're looking at now what is expected, so number one, GST, that's a big reform that's already gone. We are waiting to see what the impact of that is going to be. But the other crucial concern, which you at the State Bank of India must be having, and many other banks as well, is that real overhanging issue of NPAs, because it's that indebtedness, the debt that companies are having, private sector infrastructure companies, for example, which doesn't allow them to invest, and that's an overhang on the entire economy right now.
My sense is that even though the government has been trying to revive investment, if you look into this year's data from April, given that we had an earlier budget, and if you look into the government cash balances, which is almost at zero levels in the last 3 to 4 months, indicating the government actually is trying to push public investment at a significant basis. But my sense is that as long as the private sector comes out of this deleveraging mode, and they have been doing it consistently for the last 3 to 4 years, I think it will take a while for private investment to revive, and till that point of time, I think public investment could be the only savior in terms of larger investment.
All right. Well, Mr. Ghosh, thank you so much for joining us with that perspective. Thanks a lot. All right, joining us now, a really special panel to help us understand exactly what's happening between the good news and the bad news, and what's really on the up. Abhay Aima is joining us, HDFC Securities. I can tell you nobody understands really what the markets are doing and what's happening in the economy more than he does. Jagdish Shettigar, it's great to have you with us, somebody been very closely associated with the BJP's economic thinking for more than 2 or 3 decades. Prasenjit Bose is joining us to give us a point of view from what the left should actually think is happening in the economy. And Sanjay Jha joining us from the Congress Party. Thank you all so much for joining us. Abhay Aima, let me come to you first with that big story of the day today. Sensex, 32,000, clearly euphoric. The markets are buoyant. They seem to be saying, yeah, what are all of these worries that you guys are doing? Markets seem to be agreeing with Amit Shah, what jobs, what all of this. Everything is great, economy is in good shape, GST has been passed, and party time is here. What are the markets seeing that some of the others aren't?
See, when you say 32,000 and all-time high, in perspective, if you put it, then you also have to look at, you know, for a good part of the previous decade, the market stagnated quite a bit, and for whatever reason, whichever government. So you have to build that into, so just 32,000 itself is not a number. You should look at it relatively over the last 5 years, what has happened. It might look a more reasonable number. What are the markets feeling good about? What everyone is feeling good about. There's a government which is thinking, there's a government which is active, there's a government which is willing to take risks proactively, and the numbers are adding up to that. From what I heard from your initial comments, I won't go into the positives because they are obvious, and you know, but the negatives that are there, the biggest being job loss. I think you have to keep in mind that a job in the digital world, and it's not in India and worldwide, this traditional job losses are going to keep going away as efficiency increases. But purely with respect to India, what is happening is, and which has not been taken into account, is that as the economy grows, as you feel more secure in the economy, you tend to move towards entrepreneurship, and that what I see day to day is happening in a huge number, which is not getting, so while there is a job loss, which is also a part of digitalization, there is a huge growth, I don't think, which is being captured, which is in the entrepreneurial activities that is taking place. Okay. Otherwise, you know, the market stayed back for some time when the great economists said that, oh, demonetization is going to bring the GDP down by, there's going to be a degrowth of 2% to 3% and all those absurd numbers that came. Clearly, that has not been the case up till now. Yes, the growth is slower, but it's not negative, still on the positive side, contrary to what most people predicted. Then the new thing is GST is going to bring in inflation. In initial signs of what one sees today, yes, there are hiccups, but there doesn't seem to be a catastrophe as it was made out to be. So markets are smart enough to not go by political rhetorics, but to look at actual facts and discount them in the future. So that's where the markets are where they are.
Okay. Markets are at an all-time high because they are disregarding political rhetoric. That, in a sense, is what Abhay Aima has said. Sanjay Jha, should we be taking the signals from what the markets are saying, that data which is out today, or should we be looking also at the other data? Inflation, by the way, being down, price rise being down, politically is very significant for the BJP. Of course, we'll wait and see what happens with the monsoon and the rest of the crops. These things can change back and forth. But for the moment, at least, they will say, look at what the markets are, look at where the markets are, look at what the inflation numbers are pointing to.
Vikram, let me tell you, I completely disagree with the gentleman who spoke earlier on the stock markets. You know, in India, a manifestation of a more complex economy, where you have roughly 300 million people living below the poverty line, farmer suicides at around 40,000 in 3 years. I mean, we are talking about a larger mammoth issue. I mean, end of day, you know, look at the fact that, you know, in a situation where you had to create new jobs, today we are trying to rationalize that by saying that automation and drones and artificial intelligence, big data will reduce jobs. That's absolutely contrarian to the promises made by Mr. Modi's government. 20 million jobs. The last data we had was 1.35 lakh new jobs, which is less than 1 basis point over the last 3 years. So it's been a monumental failure. And, you know, end of day, you know, Vikram, the truth is, look at the fundamentals at the ground level. Yeah. And I'll tell you what is bizarre when we discuss about the world's fastest growing economy, when at the end of the day, the realities by statistical data is misleading. The reason is because firstly, the GDP itself is an overinflated number because they changed the methodology. That's point number one. Secondly, look at the numbers at the ground level. You have non-food bank credit at an all-time low. Okay. Stalled projects at the moment, and I'm giving you latest data, stalled projects are at 20% of the overall projects outstanding.
Yeah, and the government has now signaled that you need to start all of these, you must start rolling by 2024. The government will say, Sanjay, the government will say we have taken a lot of the reforms and it will take time to kick in. But Jagdish Shettikar, if I could just drag you in on that point, the numbers that we are seeing, for example, on industrial growth, 1.7, manufacturing 1.2, these are really, really bad numbers that are coming out. So somewhere, the economy does seem to be hurting. And yes, I know what the government is saying, you need to start cutting interest rates to get things moving, but do those numbers concern you?
From the markets, like you said, yeah, 32,000, but industrial deceleration in the industrial production to 1.7 as compared to 2.5 or so in the previous month. It is definitely a worrying signal, and it's mainly because of the other factors. Of course, even the external situation, that is a global economic situation. Most of the major markets like Eurozone.
Dr. Shettikar, let me just interrupt you for a minute. Dr. Shettikar, I'm sorry to interrupt you for a minute. Look, we often blame, Dr. Shettikar, hang on, just to be fair, we often blame the external situation, and that's fair to do if there's a collapse happening internationally, global markets are down and so on and so forth. But if you're having manufacturing at 1.2%, look at consumer durable growth, mining sector growth. This is not linked to international factors. There's obviously a problem. There's obviously a problem with investment in the country right now.
I am not defending. As far as the overall growth rate is that, as some gentleman has pointed out, as against the prediction by 2% growth rate, there has been a deceleration to 7.1% as compared to the 7.6%. Now that much decline, even the government also knew that. In fact, the CSO, they also pointed out that there would be deceleration in the growth rate. As with regard to the policy initiatives taken by the government, the result is yet to come out, because there will always be time lag of, especially in the case of the infrastructure project, to take off. It will take nearly 8 to 10 years. So to expect the result immediately, it's too early that whatever the policy initiatives taken by the government,
to be fair, it has been 3 years since the government. It will take time for the impact to be felt. Yeah. Prasenjit, your take on that, because
but government has got the clarity, which is understood by the investors, whether it is the domestic investors or the foreign investor, in spite of the fact that there has been hike in the federal rate. Whenever there is a hike in the federal rate, the FIIs withdraw from the market, but they have not done it, which shows that they have got a faith in Indian economy.
Right. I'm just taking that point up. Prasenjit, interesting point. There can be something like inflation being too low. It's not that everyone, certainly the common person really feels strongly about price rise and says prices shouldn't rise. But if price rise goes too low, then that by itself is bad. Certainly if there's deflation, it's bad. We've seen that in Japan. But too low a price rise can sometimes also be bad. And I think that's what Dr. Shettikar, with his economist hat on, is also pointing to.
Yeah, absolutely. It's common sense, because if you first of all, there is a comfortable level of inflation. I think the Reserve Bank of India pegs it somewhere around 4%. If you are having inflation which has come down below 2%, that means especially the producers are suffering. There is lack of demand. It's a deflationary situation in the economy. And I think that especially if you look at the vegetable prices, it will explain why vegetable farmers in, say, Madhya Pradesh or Maharashtra are actually protesting, because their output prices are collapsing. So I don't think that this is a very healthy rate of inflation for the economy at all. And what I would like to, actually highlight is the fact that your industrial production numbers which have come out, they corroborate what has been said by the critics, for quite some time now, that the credit growth, private investment in our economy for quite some time, especially after demonetization, has practically collapsed.
Okay, so Abhay Aima, let me turn to you now on the...
The fact is that the last quarter GDP numbers, they actually showed that post-demonetization, the GDP growth rate has come down.
Let me turn to you on some of the policy prescriptions now.
Settled. Demonetization did harm growth.
Okay,
now,
Prasenjit, we heard you.
Why the Sensex is crossing 32,000 today, I think is a classic example where the financial sector of the economy, especially the stock market, is behaving in what was called in the American context a decade back as irrational exuberance. That the real economy just does not justify the kind of numbers that you are seeing in the stock market.
Yes and no. So,
and I think
as Abhay Aima said, okay, Prasenjit, we've heard you. Can I get someone else in now?
Because the real economy is floundering.
Okay, Prasenjit, I heard you. Can I get someone else in now? Abhay, he's saying it's irrational exuberance. Now, that's one possible way of looking at it. The second is, A, the markets are saying India is still a brighter spot than many of the other places where FIIs and others can put money in. B, that they are expecting that things will start to pay off. the reform, that's what Dr. Shettikar was saying, that whatever steps the government is taking will at some point start to kick in and the economy will revive. That's the second thesis. Third possibility is, of course, that they're also feeling and tending to agree with what Arvind Subramaniam is saying, that given the circumstances right now, it's a perfect time for the RBI to start cutting interest rates and cut them aggressively. And if interest rates are cut, that's obviously really good news for the stock markets, and it might also help many of the private sector companies to deal with their NPA and other situations and start private sector investment. Do you think that's really what the stock markets are also betting on?
See, firstly, to clarify, the stock market is not, it may, in terms of numbers that are participant in the stock market, the numbers might be very limited and critics can say this is only a minority. But what you have to understand is that it is both domestic and international people, it's not me, who look at the overall economy. And they don't necessarily go by what a particular person who is following a particular agenda or an opposition party has to say. So politics, they're neutral to it. Is there money at stake? Unlike our voice at stake right now on television, so we can say anything that we want. But here are people who are putting in their money. And when you put in your money, you do your due diligence very well. And they don't necessarily go by rhetorics, and they don't necessarily go by what a political or a B political person has to say. So they're not affiliated to, they're affiliated to the economy, they're affiliated to the money, they're affiliated to profits. They're not affiliated to any political school of thought. So when they do that, you have to give it its due weightage. Okay. So right now the situation is such, barring the local domestic, what we hear from the opposition parties or left-oriented parties, everyone else, whether it's a domestic investor, international investor, or the interviews you read from it, everyone seems to be feeling that India is now on a path where they see a very good experience over, and since stock markets discount the future, obviously you're looking ahead. You're not going by this
picking
month,
up the broader signals up here, what you're saying. Okay, gentlemen, I'm already out of time. I'm already out of time. I'm just going to get a one-line answer from everybody to see if you have a consensus on one thing. Sanjay Jha, do you agree, and I'm going to ask Dr. Shettikar and Prasenjit also, the time has come for the cutting of interest rates to take place from the RBI, and that might help kickstart the economy. Sanjay, do you agree with that?
Well, let me tell you one thing, Vikram. This is exactly what the government kept saying when Mr. Raghuram Rajan was the RBI governor. Since then, the repo rates have actually come down substantially. Why hasn't bank credit taken off? Because there are fundamental fault lines in the Indian economy. The ease of doing business was targeted to be, India was to be at number 50. The ranking hasn't changed a wee bit. So the truth is, if those rates were to take off, why has gross fixed capital formation in India come down? So at the ground level, once again, I'll repeat, the fundamentals are worrying for India.
All right. One line from you, Dr. Shettikar, and one line from you, Prasenjit. Dr. Shettikar, one line. Should interest rates come down now?
It is high time the RBI moves away from the traditional approach and cut down the interest rate so that the economy will pick up.
Prasenjit, you agree with that? One line?
Well, I think that I have been arguing for an interest rate cut for a long time actually, so I have nothing against it, but 2 points. One, I don't think that the aggregate demand situation in the country is so serious that only an interest cut is not going to be enough. Secondly, the American taper, the US taper, the Fed taper, that has to be kept in mind, because if the interest rates in the United States starts going up in the foreseeable future, then how much headroom the RBI will have in terms of cutting interest rate, that will have an impact on capital outflows.
All right, Prasenjit, thanks a lot for that.
It's just not the domestic economy, but the international financial situation which the RBI has to keep in mind.
All right, well, gentlemen, let's wait and see what exactly happens there. Very clear signals and indications coming from the government that they think interest rates should go down. And of course, as I was just discussing with the State Bank of India also, there are other aspects to that as well. If interest rates start to go down, it may have its own impact on NPAs also at a gross level, and that of course might also help in kickstarting investment. So mixed bag of numbers coming out this week. Stock market really happy, joblessness cause of some concern, and then of course those inflation and IIP numbers there as well. So it's a bit of a mixed bag there on the economy. I guess a really clear picture will start coming out after the monsoons are over. You're watching Reality Check. We'll be back again next week. Bye for now.